Welcome to the Deep Dive. Today, we're really digging into VA home loan eligibility.
Yeah, it's a big topic.
It is, and if you're a veteran or maybe you work with vets, understanding these loans, well, it's crucial, but it can feel, pretty overwhelming sometimes.
Definitely. Mortgage stuff is complicated enough on its own.
Right. So we've actually got the official rule book here, parts of the VA Lender's Handbook. We want to sort of break down how eligibility works and what lenders are actually looking for.
Exactly. Think of it as like a shortcut to getting the essential info.
We're using the same guide the lenders use.
That's the idea. We want to clear things up, figure out who really qualifies, and what steps lenders take behind the scenes, make sure it's all done right.
Okay, so let's jump in. Where do we even start? How is veteran eligibility actually established?
All right. So the first thing really is to get the difference between eligibility and entitlement.
Okay.
Eligibility basically means you meet the service time and character requirements, honorable service, that kind of thing.
Got it. Service record.
Yeah. Entitlement, though, that's about the actual amount the VA will guarantee on the loan.
The dollar amount.
Kind of. And crucially, even if you are eligible, you still have to meet the lender's usual credit and income standards to get the loan approved.
Right. So eligibility is just step one.
Exactly. It just gets your foot in the door.
And for the lender, the main thing they need for that first step is the certificate of eligibility.
Yeah.
The COE.
Precisely. The handbook's really clear on this. Lenders have to confirm eligibility before they can even order an appraisal.
Okay.
And more importantly, they just cannot process or close the loan without a valid COE. Full stop. The VA won't guarantee it otherwise.
Makes sense. So how do they get this COE? You mentioned a system, WebLGY.
Yes, WebLGY.
Okay.
And inside that, there's something called the ACE online application. That's the main channel.
ACE. Okay.
Think of ACE as like the express lane. The handbook says it's the fastest preferred way.
How does it work?
Well, lenders log into the VA's information portal, that's VIP, their sort of central hub. And then they go into WebLGY, hit eligibility, and follow the prompts. Often, bang, the COE pops out almost instantly.
Oh, instantly. What if it doesn't? Does that mean there's a problem?
Not necessarily, no. The handbook specifically says that not getting it right away doesn't mean the veteran isn't eligible.
Okay, good to know.
In those cases, there's an electronic application link right there in WebLGY. Lenders can upload documents like proof of service and send it off electronically to a regional loan center, an RLC.
RLC. Those are the VA's processing centers.
Sort of, yeah. Specialist centers for loans. And even this electronic way, it's still way faster than, mailing stuff in.
What about the veterans themselves? Can they just go get their own COE?
They can, yeah. The handbook mentions using e-benefits, which is the VA's portal for veterans, or they could fill out a paper form, VA Form 26-1880, and mail it in.
Right.
Well, the potential issue is if the vet applies at the same time the lender is trying through ACE, it could actually gum up the works, slow things down.
So generally, letting the lender handle it online is probably the smoothest path.
Okay. Now, you mentioned the handbook talks about conditions on the COE. What are those? Sounds important.
Oh, absolutely vital. These conditions are like little flags for the lender. For example, you might see active duty service member.
What does that tell them?
It means eligibility is good unless the person gets discharged after the COE is issued. If that happens, they need a new COE and proof they're still active right up until closing.
Okay.
Then there are conditions tied to the funding fee. That fee most vets pay.
Yeah.
The COE will say if the vet is exempt, non-exempt, or maybe contact RLC if it's unclear.
Exempt, non-exempt, contact RLC.
Got it. And it gets pretty detailed. There are specific conditions for reservists, National Guard, something called refinance restoration, even one-time restoration.
Oh, okay. Refinance restoration, one-time restoration. Break those down a bit. Sure. So refinance restoration, sometimes called excluded entitlement, means the vet's entitlement was restored, but it can only be used for a new VA loan on the exact same property as the old one.
Okay, same house only.
Right. One-time restoration is interesting. It's for when a vet paid off a VA loan but didn't sell the house. They get one single chance to use their restored entitlement to buy a different house.
Just one chance.
Just one. And after they use it, if they ever want another VA loan, they have to prove they've sold all properties they ever bought using a VA loan. It's a one-shot deal with long-term strings attached.
That sounds like something you'd really need to understand. What about subsequent use funding fee?
That just flags that the vet has used the benefit before and had it restored. It usually means they'll pay a higher funding fee next time unless they happen to be exempt for other reasons.
And there are conditions for surviving spouses, too.
Yeah.
And POWMIA situations.
Yep. Specific conditions cover those situations, and also things like if a prior loan was paid off or foreclosed on. Because, entitlement isn't automatically back just because a loan ended. Usually you have to formally apply for restoration.
Okay. I also saw IRRLs mention those interest rate reduction refinancing loans. It says no COE needed there. Why is that?
That's right. For an IRRL, if the lender can get a VA case number through their system, that confirms there's already an active VA loan. Yeah. So the VA system basically says, yep, we know this person's eligible. No need for a separate COE for that specific refinance type.
Streamlined. Makes sense.
It is.
And it sounds like there's an Appendix 1A for a quick reference on eligibility.
Yeah, there is.
But it's not the whole story.
Definitely not. The handbook itself warns it doesn't cover every nuance or exception. Lenders really need to lean on that ACE online system in WebLGY for the definitive, up-to-date answer.
Okay, so the COE proves eligibility for the benefit. What else does it tell the lender, beyond just yes or no?
Well, first, it's always worth repeating. COE in hand doesn't automatically mean loan approved. Still gotta pass the credit and income checks, right?
Right, standard underwriting.
But yeah, the COE does give more info. Crucially, it talks about the amount of entitlement. It'll usually show the basic entitlement amount that's $36,000.
$36,000.
Okay. And it might show if any of that entitlement has been used before and not yet restored.
What about bigger loans? I've heard of bonus entitlement. Does the COE show that?
Good question. Yeah, for loans over $144,000, there's often bonus entitlement available. Up to the county loan limit, lenders have to check those limits on the VA site. The total entitlement usually covers 25% of the loan amount.
So how does the COE show this bonus part?
Interestingly, it doesn't list it as like a separate number. Instead, if bonus entitlement might be available, you'll often see a little asterisk next to the word available on the COE.
An asterisk.
Yeah, and that asterisk points to a note explaining this potential for extra entitlement. It's a bit subtle.
Okay, so what if some entitlement has been used and not restored? How does that impact a new loan?
Well, it just means less entitlement is available right now. The lender has a few choices.
Like what?
They could proceed, knowing the VA guarantee will be smaller, limited to whatever entitlement is left, or they could advise the veteran to apply for restoration. We can talk more about that.
Right.
Or the veteran could make a down payment to bridge the gap between the loan amount and what the remaining entitlement covers.
Right, bring some cash to the table.
Exactly.
Now, that funding fee section on the COE sounds like that needs close attention too.
Oh, absolutely. That plus any conditions tied to it tells the lender if the fee is due. The status will be exempt, non-exempt, or contact RLC.
Exempt means no fee. Non-exempt means pay the fee.
Pretty much. And contact RLC means the system needs more info, or maybe the loan needs prior VA approval for some reason.
And the conditions give more detail on why it's exempt or not exempt.
Precisely. Under exempt, a condition might say it's due to receiving VA disability pay, maybe even list the amount, or it might say the disability rating is pending, or it might say fax this form, VA form 268937 to the RLC.
What about under non-exempt?
It might just say the vet doesn't meet exemption criteria. Or, importantly, it might mention the exemption is based on a non-service connected pension. That's a big one because those require prior approval from the VA's pension service.
Ah, extra step.
Definitely. And if the status is contact RLC, the condition usually just says fax form 268937 for guidance.
Okay. And IRRLs come up again with funding fees.
Yeah, conveniently when the lender gets the VA case number for an IRRL through WebLGY, the system just displays the funding fee status right there. Makes it easy.
Nice.
Yeah.
And can lenders generally trust that exempt status on the COE?
Yes, typically. If the COE says exempt, they can usually rely on that. And here's a neat tie-in. If the COE for an exempt vet also lists a specific dollar amount for service-connected disability pay as a condition, the lender can actually count that as verified income for the loan application. Saves a step.
Oh, that's really helpful. Less paperwork.
Definitely a time saver.
The handbook also mentions a table of additional COE conditions. What else might pop up?
Right, that table covers other specific actions. Like if it says valid unless discharged, we already covered that. Got to verify active duty status at closing. If it says excluded entitlement, that reinforces the same property-only rule for using restored entitlement. The one-time restoration condition is a reminder about needing to dispose of all VA properties for any future restoration after this one loan.
It keeps track of that one-time use.
Exactly. And those prior approval flags pop up again too.
For the non-service-connected pension.
Yep. If the COE mentions that, it'll clearly state prior VA approval is needed, and the lender has to coordinate with the pension service. That can add time.
And if the vet has a fiduciary?
Same deal. Prior VA approval needed, and the lender has to contact the RLC because the VA's fiduciary service needs to be involved to make sure the vet's interests are protected.
Okay.
Yep.
Lots of checks and balances.
For sure.
And lastly, that subsequent use funding fee condition is just another way of saying, hey, this person's used the benefit before, fee might be higher.
Pretty much sums it up.
Okay, so let's switch gears slightly. How does the lender actually apply for the COE? What's the process look like?
Okay, practical steps. The handbook says step 1, always, is try getting it instantly via the ACE application in WebLGY.
The fast lane first.
Right. If that doesn't work, step 2 is use the electronic application link, also in WebLGY. That lets them upload supporting docs and submit it electronically to the RLC.
What if the COE comes back showing reduced entitlement and the vet needs restoration?
Then the lender uses the correct COE function, again, right there in WebLGY. They can use that to request the update and electronically submit proof for the restoration, like old closing statements or whatever's needed. The big message is use the electronic system. It's much, much faster than paper.
And just to hammer this home, not getting an instant COE doesn't mean the vet is ineligible.
Right. Absolutely not. It just means the system needed more info right then. Lenders should just proceed with the electronic application and upload the documents. Don't stop the process.
Got it. Now, what about surviving spouses? The handbook has a specific section for them. Are the rules different?
Yes, there are specific criteria. An unmarried surviving spouse might be eligible if the veteran died on active duty or from a service-connected disability.
Unmarried.
Well, there's a nuance. Eligibility can sometimes extend even if they remarried, but only if the remarriage happened after they turned 57 and it was after December 16th, 2003.
Wow, that's specific.
It is. Also, spouses of service members listed as MIA or POW for at least 90 days might get a one-time eligibility.
What if the veteran died from causes not related to service? Any chance then?
Possibly, yes, under certain conditions usually determined by the VA compensation folks.
Like what kind of conditions?
It could involve the veteran having been rated totally disabled by the VA for a long period before death, like 10 years, or 5 years right before death if it was after discharge. Or if the vet was a former POW who died after late 99 and was rated totally disabled for at least a year. It often links to whether the surviving spouse gets DIC payments, dependency indemnity compensation.
DIC. Okay. And is the application form different for a surviving spouse applying for the first time?
Yes, it is. They don't use the regular form 26-1880. They need VA form 26-1817. That's the one specifically for unmarried surviving spouses.
26-1817.
Got it. And when the lender applies via WebLGY for them, they enter the spouse's info name, DOB, social, and then upload that completed form 26-1817.
Okay, makes sense. So once the application's in, what kind of proof of service docs are typically needed?
It really varies based on the service history. For someone discharged from regular military, the DD-214 is usually the go-to document.
The discharge papers.
Right. The handbook actually prefers member copy 2, 4, or 8 if the separation was after October 1979, because those usually have the key info. Length of service, LOS, and character of service, COS.
LOS and COS, okay. What about really old separations, pre-1950?
Different documents then, but they still need to show that LOS and COS somehow.
And for someone still on active duty now?
They need a statement of service, an SOS. It needs to be official, signed by someone authorized in their command, like the adjutant or CO. It's not a specific VA form, often just on letterhead, maybe even electronic.
What info has to be on it?
It needs the full name, social security number, or last four, entry date, any lost time, and current command contact info. That's key.
Okay. How about reserves or National Guard members? Discharged or still serving?
Different docs again. Discharged Army or Air National Guard usually need NGB Form 22 and NGB Form 23B, and that 23B must show the character of service.
NGB forms, got it.
Discharged reservists need a point statement that also shows character of service. Basically, for any reserve or guard, they get an annual retirement points summary. That plus proof of honorable service is usually what's needed.
And if they're currently in the reserves or guard?
They need an SOS, similar to active duty, but it also has to state their number of creditable drill years. If they got called to active duty, they need those orders and command contact info too.
Important distinction.
Yeah, the SOS has to confirm they're in an active drilling status, not just inactive reserve. That's a big difference.
Sounds like tracking down these old records could be tough sometimes. What if they're hard to get?
Yeah. The handbook lists ways: National Archives, e-benefits, submitting an SF-180 form. But here's the really important part.
What's that?
Don't wait for the documents to apply for the COE.
Apply first.
Yes. The VA's own internal systems often have enough info, especially for regular active duty folks, to make an initial eligibility call. So get the COE application started right away. Don't delay.
Great advice. Okay, so we've covered the process, the paperwork. Let's nail down the core eligibility rules themselves. What are the fundamentals?
Okay, the baseline rule. Served active duty Army, Navy, Air Force, Marines, Coast Guard after September 15th, 1940. Discharged under conditions other than dishonorable.
Other than dishonorable. Key phrase.
Very. And met minimum service time, generally 90 plus continuous days during wartime, or 181 plus continuous days during peacetime.
But didn't you say there's a longer requirement for more recent enlistees?
Yes, that's a big one. If you enlisted after September 7, 1980, or came in as an officer after October 16, 1981, the requirement is usually 24 continuous months of active duty, or the full period you were called up for, whichever is shorter.
24 months.
But even then, the minimum floor is still 90 days if any service was wartime, or 181 continuous days if it was all peacetime.
Okay. And what if the discharge was other than honorable?
That needs a closer look by the VA Compensation Department. They decide if it still qualifies as other than dishonorable for loan purposes. It's not an automatic disqualifier, but it needs review.
The handbook has that table of wartime and peacetime eras, right? That must be essential for figuring out the 90 versus 181 days.
Absolutely critical. It lists the exact start and end dates for WWII, Korea, Vietnam, including a specific start for service in Vietnam, the post-Vietnam period, and the Persian Gulf War, which is still considered ongoing since August 90. You need those dates to know which time requirement applies.
Makes sense. What about reserves and National Guard eligibility? Is it just based on active duty time they might have had?
Not necessarily. They have their own path too. If they don't qualify based on active duty, they can become eligible by completing at least 6 years of honorable service in an active drilling status.
6 years.
6 years. And it has to be honorable service. A general discharge or under honorable conditions doesn't cut it for this 6-year rule.
Okay, strictly honorable.
Right. And time spent inactive, like in the individual ready reserve, doesn't count towards the 6 years. It has to be active participation, drilling status.
Got it. The handbook also mentions a basic eligibility table, another quick lookup tool.
Yeah, sounds like it. A quick reference for common scenarios. But again, the handbook warns it's not exhaustive. The VA makes the final call, so don't rely solely on a table.
Okay. And surviving spouses, we covered the details, but just quick recap on who might be eligible.
Sure. Unmarried spouse if veteran died from service-connected causes, or spouse remarried after 57 and after December 2003. Spouse of NA PAW for 90-plus days, one-time use. And potentially spouses if the vet died from non-service causes, but met those specific disability or POW conditions we talked about.
And receiving DIC payments can also be a factor.
Exactly. Often linked to eligibility in those non-service-connected death cases.
What about additional eligibility or other qualifying service? What's that about?
That's basically acknowledging Congress sometimes grants veteran status to other groups, maybe certain public health service officers or military academy cadets in specific situations.
Not the usual branches.
Right. Since those are unique cases, the advice is lenders should contact the RLC for guidance. Don't guess.
And finally, exceptions to length of service. This sounds important.
Hugely important. There are quite a few exceptions. A big one is if someone was discharged for a service-connected disability, sometimes only 1 day of active service might be enough.
Only 1 day?
Yeah. Because there are so many possibilities, the handbook doesn't list them all. The key advice for lenders is, don't assume someone's ineligible just based on service length. Always submit the application to the VA for a formal decision.
Let the VA decide.
Exactly. And it mentions there's more info on what happens when a COE is denied, but we don't have those details here.
Okay, so what if a vet has used their benefit before? Can they get another VA loan? Let's talk about restoring entitlement.
Yes, absolutely. Good news is entitlement often can be restored for future use.
How? What's the basic way?
The main way is the property bought with the prior VA loan has been sold, and that original loan is fully paid off. Property gone, loan paid.
Simple enough. Any other way?
Yes. If another eligible veteran assumes the original loan and agrees to substitute their own VA entitlement for the amount the first vet used.
Ah, a substitution.
Right. Of course, the veteran assuming the loan still has to meet all the VA requirements themselves: occupancy, income, credit.
Okay. And you mentioned special restoration cases.
Yeah, a couple of common ones. One is just doing a regular cash-out refinance of an existing VA loan on the same property.
Yeah.
If that original VA loan gets paid off at the refi closing, entitlement is usually restored, even though they still own the house.
Okay, cash out refi restores it. What's the other one?
That's the one-time restoration we touched on earlier. This is when the prior VA loan is paid off, but the vet didn't sell the property.
Still owns the old house.
Right. They can apply for this one-time restoration to buy a different property. But remember the catch. The COE will flag it as a one-time deal. And for any future VA loan use after that, they have to prove they've sold all VA finance properties they ever owned.
Maryland and George example really clarified that. Moving, keeping the old place, buying a new one.
Exactly. It lets someone relocate using the benefit again, even if they kept the first house, maybe as a rental after refinancing it out of the VA program. But it sets a future condition. Gotta sell both eventually if you want to use the VA loan benefit again.
Truly one time. Okay, last topic here, and it sounds serious. Misuse of entitlement. What does that mean?
Yeah, this is important. Misuse is basically when the veteran doesn't genuinely intend to live in the property as their main home.
Like buying it for someone else.
Or a key example the handbook gives, arranging to sell or flip the property to someone else before even closing on the VA loan.
No.
The whole point of the program is helping vets get a home to occupy.
So it has to be for their own occupancy.
That's the fundamental requirement, bona fide intent to occupy.
What should a lender do if they suspect misuse? If something feels off?
Handbook's very direct. If there's any doubt or question about whether the entitlement use is legitimate for that specific deal, stop and contact the VA Regional Loan Center for the area where the property is located.
Don't proceed.
Get advice first. Contact the RLC, explain the situation, and get guidance on how to handle it. Don't make assumptions, but don't ignore potential red flags either.
Okay, so wrapping this all up, we've really gone through the fundamentals of VA loan eligibility, straight from the lender's playbook.
Absolutely. We've seen how vital that COE is, the different ways eligibility works depending on service, and, the lender's role in checking service, understanding those COE conditions, and managing entitlement. It's a lot.
It is a lot. And we should remind everyone what we talked about today is, well, it's just a slice of the full VA Lender's Handbook. Yeah. There's way more detail in the actual thing.
Oh, for sure. If you have a really specific situation, or if you work in VA lending, diving into the full handbook is definitely worthwhile. But hopefully getting these basics down helps everyone, vets and lenders, have better conversations and make smarter decisions.
Definitely empowers people.
Yeah.
So thinking about all these rules, the specifics, the potential complexities, what part of veteran benefits or maybe lender responsibilities do you think is most often misunderstood out there?
It's a good question to ponder.
Something for our listeners to think about. Thanks for joining us for this deep dive.